Hi everyone, thanks for joining us this afternoon. We're just going to give it another few minutes to let some other people join the webinar. Okay, I think we'll kick off now. So I just wanted to welcome you all this afternoon to the Green Crowd Investors webinar. For those who don't know me, I'm Janine Donoghue and I'm the Operations Manager here at Green Crowd. Just going to put up some regulatory disclaimers now for you to have a quick look at, and then we'll kick on then. So as you're having a quick look at those, there is a question and answer facility available today, so you can feel free to ask your questions as we go along. We will endeavour to try and answer them all during the webinar, but if not, we can get back to people individually after the webinar. There will be a recording made available for everyone who's attended and for anyone who hasn't. So you can expect that in your inbox tomorrow. So I'll just hand you over now to Paul and Donal, and they will take you through the rest of the webinar. Thanks.
Great. Thank you, Janine. Hi to everyone there. My name is Donal O'Shea. I'm the Finance and Fundraising Director here in Green Crowd. And to my left here is Paul Brown. He's our CEO and one of the directors also of Green Crowd. So we'd like to thank you all for taking the time to attend here today, and we hope you'll find it useful in terms of what we're offering, and I suppose just EIS in general, and to give you a bit of flavour for that. So firstly, I suppose, Paul, if you want to give a little maybe introduction into Green Crowd, I suppose how it came about, and even I suppose your own background as well, because that probably I suppose fed into how Green Crowd came about.
Yeah, great. Well, look, big hello to everyone. Thank you for joining us today. As Donal said, I'm Paul Brown. I suppose I'm the founder of Green Crowd. Green Crowd, I suppose, it's been a bit of an evolution. It came about as a follow-on to my first EIS endeavours back in 2017 here in Ireland. I had established a solar business in Northern Ireland in 2014 and installed approximately 1,200 commercial rooftop solar systems in Northern Ireland. And the huge, I suppose, buoyancy that we had there is there was a huge liquidity market in London for EIS funds. This allowed operators like myself to get immediate access to funds to allow our commercial customers to adopt solar and to deploy it. Because the key thing about adopting renewable sources of energy is the huge upfront capital cost for your traditional source of energy. You pay for it as you use it, you pay for your fuel as you use it, etc. So in order to be able to facilitate and make that transition easy into the renewable space, the key thing is to have readily available capital. And when I came back into Ireland in 2017 to establish a sister solar company in the south, I did the rounds with the traditional banks and with traditional funding houses, the EIIS funding space. None of them really wanted to engage with solar at that early stage. So we found an absence of risk finance to enable the deployment of solar in Ireland. And I suppose my first project was Solar Stream, a business established in 2017. It raised essentially 3 million, 2.9 million on the back of EIS. And it's had a successful run. It raised in 2017 to 2021 and it's paid back 2017, 18, 19, 20. And we're into a final year of making arrangements for investors for a final payback. And I suppose the two were intertwined. A lot of my investors liked what I was doing in Solar Stream. We were giving an asset-backed product. We were installing solar on rooftop premises for commercial businesses in Ireland, and they were paying for the energy out of their savings that they were making, and they were gradually paying back the solar systems over a 5 and a 7 year life. And our initial investors liked this. We maxed the fundraising we needed in Solar Stream, and our investors were saying, have you any other products? So Green Crowd sort of came about through that, and we are the Green Crowd people. We raise money in the Green Crowd space. And we started bringing on bioenergy projects with Jerkcross, Woodco down in Tipperary, well-established business doing biomass projects. We got involved in social housing through Avancore Construction in 2021 as well. And I suppose through that process, Janine joined me in 2021 as well. And I suppose that was the start of enabling Green Crowd as a separate standalone crowdfunding platform in Ireland. We're one of 4 or 5 that are licensed here in Ireland, and we have a European passport. We got our license in December 2023 through the central bank, and we're central bank regulated. So that's been a sort of the evolution of our business. We're now an independent crowdfunding platform specializing in solar and bringing solar product to the market, where we are a bit different. What I like to think we're a bit different to the traditional EIS funds out there is that we're very much focused in the renewable space. We have an expertise here. Our focus is on asset-backed projects. We're not deploying into the software innovation space. We very much are identifying low-risk projects that are asset-backed, and that's our core strategy. And the money isn't being spent on enabling development workers' salaries. We're simply deploying the actual capital, the infrastructure capital that we raise as the projects come through a pretty robust due diligence process in selecting those projects and in pinning our flags to the mast.
Yeah, I think that's pretty clear. I suppose another big thing that I've seen in my time here as well, which is about 5 months for people that are watching, the lack of fees, I suppose, for investors is obviously quite a bit of a nuance as well in terms of how Green Crowd operate.
Well, I suppose that's what I had to do to innovate to get into the market. I was up against the traditional EIS fundraising houses, who were very select about the type of products that they wanted as well, but they were charging investors 3% up front. And a key thing for me is why are you charging people to invest with you? There was just a conflict there. So I removed the 3% fundraising cost that is traditionally charged up front. How we overcame that is we digitalized. We created our own digitalized platform. We're unique in that respect, in that we have a back-end digitalized platform. So investors can invest, they can see our information memorandum, they can look at the projects, and they can make their pledges online in a digital form. And that's enabled us to get a level of cost efficiencies in the deployment of our capital. And hence why we waived, should I say, the initial investor cost of investing in projects.
No, definitely, yeah. And I suppose I think you alluded to there a minute or two ago, the central bank license obviously was a very big milestone for the company as well.
Yeah, I suppose it was a turning point. Suddenly, we had been nearly, I'd say, year and a half, and I should say thanks to Janine, she was very involved in the detailed process of that. It was, EU harmonization legislation came in to, I suppose, bring a level of regulation to this grey space. The provision of non-bank lending and non-bank funding into a space critically needed to enable SMEs to create growth and so forth. And we came through that process. It was a pretty arduous, diligent process with central bank vetting us the whole way through, looking at our internal procedures. And as part of that, I suppose we received it in December 2023. I suppose we became grown up as part of that process, and we have a pretty strong governance and regulation process involved. We have 2 independent directors to our board. Our chairperson is Eileen Cole, ex-SWS and Marine Capital, brings a huge amount of regulatory and corporate governance experience to our board. We've also built and supported that board by a second investor director that joined us this year, Tom Barry, ex-director of EIB, their corporate finance division. Again, a very capable, experienced, director from a banking background, brings a very detailed regimental process to evaluating the projects that we bring to the board. And we've supplemented that with an independent director, Mark Lynch, again from Corporate Governance Ireland. Mark, again, comes from that independent investor circuit, huge experience in this space. And he very much represents the investors on our 2 SPCs that we have this year, Eden and SRE. So again, a huge level of accountability and tiers of reporting responsibility for us in terms of bringing projects through. Initially, the management team, Janine, myself, Kevin, Van, and yourselves, Donald, doing that initial vetting of the projects and then bringing them through to the board for sign off before we can advance on them. So again, it's part of revolution. I suppose it's a step first step in this whole series of further growth that we envisage through Green Crowd.
Yeah, no, and to be fair, I was very impressed myself when I first met the board in that it's quite heavy hitting for such a relatively new company. It's a lot of experience to have there, and I think it can only serve Green Crowd well. And I suppose just to build on what you had mentioned there as well in terms of vetting process, I suppose it really is extensive in terms of we do two to three raises a year usually. So, but we could have offers from an awful lot of companies, that were looking for raises. So we do a lot of vetting to see who are the right companies we want to raise for in any year. And then I suppose following on from that, in terms of those companies when we have raised, vetting what projects they put the money into as well, and ensuring that it's going into assets, as Paul said.
Yeah, and I think you've touched on it there, Donald. The first part of this process is screening, but that's just the start of it. There's a selective screening down to identify those projects that are suitable, from a credit risk point of view, from, a technical established technology capability and deliverability of that product. But that's only the start. I suppose what I would like to think differentiate Green Crowd is we're there the whole way along that journey. We bring an asset management solution to it as well. So it's not a standoff solution where we raise the money, we earn our fees, we provide the money to the projects, and we talk to them once a year and hope everything's going okay. This is very much an asset management role. It's projects that we've identified with. Our investors are in there. We're actually project managing the delivery of that asset. The installation of the infrastructure with our development partners and our installed partners, but a regular quarter accountability and overseeing of those projects. So I'd like to think that it's very much it's a hand-on asset management solution for our investors as well as a funding house.
Well, it's like how you mentioned, I suppose the money isn't going into salaries. I suppose the reason that we're able to do that is because Green Crowd employees like you and I and Kevin, our development manager, and Janine, we're all doing work to track these assets, to do the background checks, etc., to make sure that the funding is actually going and it's performing the way we want it to perform. So hence how we can guarantee that the money is going into assets, which is really where we want it to be.
The main driver is the 50% tax relief on your investment up front. What you have is you will have a bonus. Each project has a different bonus and a different hurdle level. And the whole idea is when that pays out, it's a gain. Whilst it's not the main driver, it is a gain, and there will be a level of capital gains tax on that. But again, that tends to be nominal enough, and most people can, get their advice from the tax advisors on that. That's really it's a good effective tax relief. It's putting money where it's needed. Our attempt is to minimize that risk, make sure that it's asset backed, that it creates jobs, and I suppose a key thing as part of our own strategy is that it enables the deployment of capital and risk funds into the renewable space to allow us to clean up our emissions, clean up our planet, and do something very, very positive.
Yeah, no, like it is for the green investors. I mean, obviously everyone wants to get returns and nobody's giving money away for free. But the green piece is a big factor of it. And as you always say yourself, we're not just greenwashing here. We actually do think green and we invest green.
Well, it's 100% green. I can say that everything we're doing is 100% green, and you have the assurity of that. Your money is going specifically into projects. You know what those projects are. Our investors updates gives everybody an update on each project, how things are progressing, how we're deploying funds, and whether we're on target or not on target.
Yeah, very good. So I suppose our two current funds, as maybe some of our investors know or don't know, they're both at 50% tax relief. But maybe just to give people a bit of a flavour, I suppose, of that relief, and I suppose maybe as regards, I suppose there's other reliefs that fall off of it. Why is the 50 so valuable?
Yeah, look, it's very unique. It's a bit of a bumper, and the 50% that was introduced by the government and the minister last year was to encourage the investment in startup businesses. Again, this is where there's a huge dearth of investment, or an absence of it, of risk capital coming through to support startup businesses and to get them out of the trap. And I mean, most people are focused on friends and family for support. So the whole idea of 50% is just to attract people in and give them that extra bit to get involved in startup businesses. As you get into running businesses under EIS, you're getting tax relief of 35 or 20%. But this 50% is unique. It's available once the companies haven't traded, once they're not operating in the market, and it's designed for their pre-commercial activity to allow them to get started and get out of the traps. As businesses progress, and you will see some of our projects, the previous projects, the likes of Battery Box, Avancourt, Bioenergy, these would have all qualified at that 35% level. They're trading companies. To get 35%, the business has to be no more than 10 years since incorporation, or 7 years trading. And I suppose as businesses come through that evolution, the tax relief, as businesses start to become successful and viable, the tax relief falls down to 20%. So I think what we have is we have some unique offerings for these two projects. As we talk about them, Donal, as we go through this, you'll see as we come into the second year, as we commercialise these 50% benefits won't be there. Certainly for SRE, they won't be there. So we have a unique chance now, and I'm really sort of encouraging people to go with it now if they can. Make sure they get the full benefit of the bumper relief that we have. And
yeah, I suppose like the EIS itself is kind of signed off on the government nearly on a biannual basis. So it's there now until the end of 2026. But realistically, they roll it, and they'll likely roll it again, because ultimately the EIS, it's a means of getting investment into green that the government doesn't have to put in themselves. So
yeah, you'll see that, but you might see some sort of restriction to the 50% tax relief. I mean, what's unique about it, certainly for the renewable space at the moment, is that initial risk financing is there, certainly on the solar farm, right through until that first commercial sale is made. So it's actually quite unique. And I mean, the government has its targets to meet. There needs to be a deployment. The large scale utility companies are coming in, the likes of Statkraft and Octopus are there on a large scale, developing hundreds and hundreds of acres of solar, deploying at a utility level. But there is a need to incentivize and encourage communities to deploy solar, small scale SMEs to deploy solar, rooftop to deploy solar. So we're very much hoping that that's there. But it's there right now. It's a unique opportunity, and certainly we're trying to avail of that for our investors, and we've been being very active in identifying projects for them in that space.
Yeah, no, and to be fair, I think that is a fair point. The EIS, I think, will definitely continue in some guides, but yeah, the 50%, who knows how much longer that could be around for. So while it's there, people should avail of it. I suppose moving on then to get into our two actual current funds which we're raising for this year. If we start with SRE, maybe if you want to give us a quick background for the company SRE and I suppose its benefits.
Yeah, I suppose SRE is focused on the rooftop deployment, the commercial and industrial space. Looking at those large rooftops that are around Ireland, that are in logistics parks, the hubs all around Dublin, large manufacturing plants that have a huge amount of roof space, and that space is being unused. So I suppose, again, from a sustainability point of view, it's a huge focus of ours to see, can we deploy an underutilized asset space, which is what rooftops are. As I mentioned, for the likes of SMEs, they want to adopt solar, but that capital cost of deployment is an issue. So what we have is we've developed a unique product which we call electricity as a service, and we supply electricity on commercial and industrial rooftops directly to the customers on their roofs and behind the meters, pure green energy at a rate that's less than what they bring in from the grid because they don't have their transmission and distribution charges to pay the ESB networks to do that.
So it gives them certainty of price.
They have certainty of price. With some of our products, we can actually fix that price. In fact, we have a very innovative product for SME sector where we can actually fix the energy price for the next 15 years for them. And that's proving very popular. We're deploying that across the nation, across 25 retail stores with an actual retail group. They find it very attractive. It's like their ability to be able to fix their wages costs for certain staff for 15 years, and that's hugely attractive. How we can do that is a lot of our costs are incurred up front on day one. We know precisely what those costs are. We know what the energy costs are. And because it's established and proven technology, a lot of the costs that you might have over that 15-year period are covered by warranties. So it's a risk that we can very comfortably do. I suppose it creates certainty. We have certainty of technology on the roof. The customer has certainty of their energy price, and our investors have certainty of repayment because you have a gradual monthly payment taking place. It's going into a sinking fund. It's from an established business. I suppose, the technology is established. Probably the hardest part of it is to find the right customers, those with good covenants. It's a robust due diligence process. We carry out experience checks and credit due diligence checks. And if we can only put up, according to the credit report, if we can only put up 100,000 of infrastructure, that's what we're putting up. So I think SRE has a unique product there. We are working with established solar installers around Ireland that are identifying these opportunities. They're coming to us and say, look, we have a customer. They want to do 300 megawatts or 300 kilowatts, which is a 300,000 investment. They really want to do it. They've selected us as the installer, but the grants are attractive. The grants are given 20%, but they're not taking them the rest of the 80% journey. And our funding allows us to do that. We're manufacturing electricity. We're manufacturing electricity on the roof from infrastructure that we and our investors own. And that infrastructure has been paid back gradually over a 5-7 year period, and indeed up to 25 years on the larger customers. And how we hedge that is we have a hybrid mix of 5-year paybacks, 7-year paybacks, and 25-year paybacks. And we see a refinance at year 5. The attraction of a 25-year payback, it tends to be generally from the larger pharma or larger established manufacturing companies, and it's a very good covenant that funders are happy.
Yeah, very good. I suppose as people I think will have gathered now, Paul has significant experience himself on the solar side, and I suppose that combined with his corporate experience, probably it's why all this is working and why it's growing. I mean, the SRE model that he's proposing here, he's done elements of that with some of his sister companies with SolarStream as well. So he's very well versed, I suppose, in how it all will kind of gel together. And I suppose, as you say, it could morph in time into, batteries and other things as well off that.
Yeah, I mean, if you look at the UK trend, and I suppose I'd always look at UK and Germany to see where Ireland is going. We tend to be a couple of years behind the clock, unfortunately, on them. But what we're seeing in the UK market is utility scale solar is deploying about 40% of the green energy. And the commercial industrial is an important part of that. It's 40% of that mix. Residential is doing about 20% of it. So it's a key important part. And I suppose at this early stage of roll-off by government policy, I won't say it's ignored, but that there's a huge focus on the utility rollout to get scale. But rooftop will account for 40% of it, of the actual deployment of green energy here in Ireland. And what we're seeing is, as we go through this, we're seeing larger roofs. We're seeing the refrigeration sector with a huge amount of rooftop space, constant need for energy. We're seeing logistics centres with unused roof space. They've taken the initial efficiencies. They have LED light in the space, and they've all this unused roof. And we see a huge opportunity here. And indeed, we're looking at one roof, in the Munster region, that's 3 megawatts. Now, that's bigger than SRE's fund at the moment. That would be a 3 million deployment into an urban area where there's a huge issue with grid stability in that area. And it's not only is it bringing investment solution for ourselves, but it's bringing solutions for grid management as well. So I see this being a core sector for the next couple of years, albeit that in terms of its attractiveness for EIS investors, you're probably going to see a fall down in the tax relief from 50% to 35%, but you're going to be exposed to ever increasing attractive projects in this space as we get scale and as we get momentum.
And I suppose, to be clear, the fall down is just because it's likely to start trading early in the new year. So that's why it drops from the 50 once it starts trading for people.
Yeah.
I suppose in terms of just even the compliance and due diligence for the likes of SRE, and it'll be true of Eden as well. Our investment committee, obviously, a lot of independent directors. So it's not just you and I that decide where we're going to deploy.
No, and you know, before we get to the investor committee, I mean, the projects are coming in from established, credible installers around Ireland. There are 2 or 3, you know, core installers that we work with around Ireland. We have the likes of PV Energy Ireland in the west of Ireland, Copper Coast Renewables in the southeast of Ireland, Q Power in Dublin, and more being identified. They're on the ground, they're identifying opportunities, they're established installers, and they have the capability of deploying. That's a key thing. Raising the funds is one thing, but your ability to deploy is important as well. So, you know, we've identified some good critical partners to do that. And as you said, as we bring it through, then the quality of the projects they're bringing to us, you know, they tend to be selective themselves in terms of the projects. They're bringing us larger projects that they can get efficiencies in their pricing on, and to whom the PPA rate is proving attractive. And then, as I mentioned earlier, you're bringing that up screening through our board to our investor committee to approve those projects.
Yeah, no, exactly. And I suppose, moving on to our second company, Eden, that we're raising for.
Yeah, I suppose this is one I've been quite involved in quite recently. There's a huge amount of momentum has started. And again, I mean, where has Eden started from? What I've seen over the last 2 to 3 years is, you know, attempts by the Green Minister, Eamon Ryan, to encourage community involvement in the solar space, to see the adoption by SMEs into this space. And we've seen the arrival of the large scale utilities to Ireland, you know, very selective, you know, wanting a certain scale to deploy and having the ability to deploy that off their balance sheet. But what is left behind is a huge amount of 5 megawatts that were encouraged by the government 2 or 3 years ago, and just for different reasons didn't work at the time. There wasn't a support there. They were competing against these large scale utility projects that could come in with a much lower rate when they were bidding in auction for the government 15-year contracts. But what we've seen happen in the last year is we've seen the government emerge with a small scale renewable energy support, and that's allowing smaller solar farms up to 5 and 6 megawatts to have a guaranteed 15-year offtake for the government. A low rate, generally a hurdle rate of about 6 to 8% being achieved on these projects, but sufficient to get momentum.
And it's guaranteed.
It's guaranteed. It's hugely attractive in that it's guaranteed by the government. It's there for 15 years. It is giving a lower return, but it suits our investor profile in that it's giving our investors a guaranteed return. And we can get that, you know, that 6%, 8% on these projects if we get the efficiencies right. And that's allowing us to make the return for investors. It's allowing us to have our asset management fees for that period of time paid as well, so we can manage them and look after them. And it's allowing community and smaller scale projects to come in here, you know.
And I suppose if you take a step back, even in the context of Eden, why it's needed is that some of those smaller scale projects, they just can't get the funding.
Yeah, well, you know, there's a couple of there. We've 3 at the moment that we're actively looking at. There's one, a small scale, 3 megawatts. The promoter has been pushing very hard to develop that for the last couple of years. He's got his planning, he's got his grid. It's in a rural environment in Ireland. Love to do it, but you have, you know, it's a 3 million ask. Banks looking for security from that gentleman, a farmer, and you know, it's 300 acres of security that would be needed to give the banks the comfort for a person wanting to develop a small scale solar farm on 9 to 10 acres. So the level of traditional risk support that's needed in this space by the traditional banks just doesn't make it work. You have a community program that we're working with, 2 community programs. In fact, I'm meeting one this evening in a hall in the Midlands. There'll be 20 or 30 people at it. They've got the planning they've got the grid connection for 5 megawatts. We're taking them through that journey now of getting their planning for 5 megawatts, doing the detailed engineering study, building the financial model for that, And there's a whole host of businesses like that coming through. So right on our agenda there at the moment, we have, 15 megawatts, very exciting project in the Midlands that's got its planning and that has got its grid. And for similar reasons, just through traditional money, not giving the landowners, the farmers, the money needed to build out that 50, 60 acres of a solar farm, it just hasn't been enabled. So, I'd like to think that when we sit back and we have fully populated Eden, we'll have enabled a 15 megawatt solar farm. We'll have enabled an 8 megawatt solar farm in Kerry. We'll have enabled the small scale 3 megawatt solar farm, which we hope, indeed, if that promoter is successful in Kerry, he's going to grow that to another 10 megawatts. And we would hope then we could bring that opportunity back for investors as a separate standalone project in the future, that EIS investors will be in there and will own. So I think we're finding a niche for ourselves there, Donald. It's this EIS money is really going to start working, is really going to start deploying in this space, in this mid-sector space.
And I suppose to give people a flavour, in terms of you're talking about megawatts, ballpark, I believe a megawatt is circa 1 million. So if you're talking 10 megawatts,
Yeah,
it's circa 10 million of development. But if that wouldn't all be today or tomorrow, I suppose it's phased.
no, it's not. Like a megawatt, yeah, is €1 million to put into context. We'd hope, obviously, we'd be hoping we bring it in a lot less than that. A lot of our projects are 700,000-800,000 a megawatt through efficiencies we're getting there. But we would, to talk, it's a megawatt, €1 million. And to put a megawatt into context, it's about 2,000 panels. And there's a unique opportunity starting to happen, which we see a lot of in the traditional space and the previous business we're involved in SolarStream, a lot of those customers that have adopted commercial and have covered their roofs, they've completely covered their roofs. They're now saying, can we buy a chunk of a solar farm? There's a new market that's about to emerge. Maybe not the EIS market, but it might be a follow-on for EIS investors, where they can go in and they can buy 500 panels, or they can buy a tenth of a solar farm. And we're going to see that. And I think that's an exciting part for the community projects that we're bringing on. One community that we have is associated with over 1,000 members. And to give everyone a slice of an involvement in that project, and to give every one of them tax relief as well, that if they're putting in their 10,000, it's costing them 5,000. And it's a bit of something they own, they can be proud of as well. So we see that attraction starting to happen. So we are expecting, what we are in 2026 to be slightly different. We think we will have some community projects as well that we're facilitating and we're funding as well through the EIS mechanism.
Yeah, and I suppose we didn't probably call it out earlier on, but essentially that's what EIS is. You're taking redeemable shares in a company, you hold them for 4 years, and then in year 5, the company is redeeming them back for your cash. So if you took, I'll use around some figure like 100,000, you put in that now, you'll get 50,000 of it back next year because of the 50% tax relief. So you've got 50 grand back straight away. And in 5 years' time, you're getting your 100, plus we generally have a small bonus. It's 5% on the current fund. So it's 155 for 100. So 55% return, divide that over 4.5 years, you're talking 12 to 15% return year on year, which is quite an attractive return. And as Paul said as well, I think in terms of even just, this is essentially owning a piece of a solar farm for 4 years, or if investors want to stay in, we obviously might have discussions with them longer term after that. But for people who want to invest green and obviously make their returns as well, it is a very interesting way to do it. And I think you had mentioned earlier on as well, in terms of the tax reliefs, actually the 50%, it's slightly different for Eden in terms of SRE.
Yeah, I mean, I suppose Eden as the project, we have 3 projects in our site. One of them is quite large. It's a 15 megawatt project. It's quite extensive. It will really be 3 years for deployment. We've a binding heads of terms on it at the moment. We're starting, full engineering due diligence on it at this stage, just to make sure that it's robust. There's a couple of issues there in planning that require the finalization of the cable route, etc. While the project has planning, there's a couple of conditions that has to be satisfied. So we're in the thick of that, and we see that as being a 3-year journey to get full commercialization and to de-risk that. Some of the other projects, the smaller project, the 3 megawatt project, is practically ready to go there. It's essentially, it does have its risks. We've to still get a bit of the legal due diligence tied up. We have to get the SSRES government subsidy for it, but again, that's us enabling that. We have the expertise to do that, and we'll enable that. And sees a level of asset management. Different projects will have different returns. You know, as I said, yeah, you are targeting some of our projects. We've achieved 16% on them historically. We are targeting 5% for a lot of these projects through a mix. Some projects will do better, some won't do as well. But I mean, what we hope is we'll have a broad spectrum of projects that we bring out to the investors over the next couple of years, and which, as we have done the historical couple of projects that we're now at this stage, you know, refinancing and repaying back investors. So you will see that, Mila, you mightn't have the same level of returns on the community projects. As you move into the SRE projects, you're going to see slightly higher returns as we go forward. But again, returns is always a balance of risk and reward. Some projects will succeed, some will fail. And for us, we try and make that selection at the early stage. But at the end of the day, it is a risk warning in this space.
Yeah, I suppose I know to me the percentage bonus return, it's not as hugely relevant either. I mean, if you took the example I gave a second ago, it was 5,000 out of 100, but 50, there was 55 profit, but 50 of the profit was actually just your tax relief. So the tax relief really is the main incentive.
Yeah, it's a key thing. Like, we could, I mean, I have had these conversations with investors, and indeed, projects as well. Some of our project owners are a bit surprised that we're not taking up equity. We don't necessarily need equity in the projects. If the projects are pretty straightforward and there's not a huge risk and there's not a huge upside, it's all about getting the investors capital more so than a bigger return. So we're always trying to balance that. I'd much prefer to have a much lower return for the project and a much stronger chance of getting the investment back in its entirety for the investor. So we're very focused on that. Some EIIS projects will talk about a 10x opportunity to increase the value of your shares and make a huge return. It's not our space. It's all about building sustainable infrastructure that's there for the long term, that will give a constant regulated payback that can be obviously in the rooftop to get customers payback pretty quickly, but on the utility solar farm that will give a continuous robust payment for 15 and 25 years that will allow the projects to be refinanced.
And to be fair, I suppose all of your funds to date have returned anyway. I suppose to be
they have. But I suppose, like all things, as we scale and we bring in more projects, there will be that risk. So that's always there behind the scene, and we try and manage that. We had a project last year that we did a small fundraise in the whiskey space. That's going through a difficult time at the moment with tariffs, but we're involved in there. The company itself is managing that risk. We're involved at the director level now managing that risk, and we are sleeves up and we're hands on for 5 years to manage that risk for our investors.
Well, like ultimately, we're growing Green Crowd. We need these to succeed for us to succeed and for us to grow. So I suppose we're all on this journey together, is the way I would view it anyway. So in terms of the investment process, then, do you want to even just take some of our new investors here through how it all?
Yeah, well, I suppose this is the compliance end. Just to make sure everything is right. Obviously, the key date that we have is the 31st of December. A lot of the year is worked towards these couple of weeks, and this, it's a slightly different format. Up to now we've had an investor presentation with PowerPoint. Most of our existing investors have their information memorandum. This presentation is more around introducing our new investors to our new fundraising activity, to the process. So it's useful just to outline it. Your key date is the 31st of December. What you want to do is log on. We're a digital platform, greencrowd.ie. Log on there, express your interest. Janine will log you in. You get in, you get your information memorandum. You'll see the past performances of the business if it's relevant, not in these two cases, but you can pledge there, and you can download your application. You can fill out that application. Send us an email. It is digital, but do rely on both process. Send us an email as well to Janine at Green Crowd, Paul at Green Crowd, Donald at Green Crowd. We have very simple emails, and send us an email if you have any difficulties. But fill out that application form, identify what you want to invest in Eden, an SRE. We can't advise you on either. We don't get involved in that space. But we've outlined both projects in a lot of detail. We then ask you to supply all the AML information, anti-money laundering information. That's where you have to give us, a copy of your passport and your utility bill, or a couple of utility bills, and we outline that process. But get it done early. you know, if you're watching this video and you put the hour and the time into it, spend that extra 10 or 15 minutes now, log on to Green Crowd, express your interest and get that application downloaded. And, you know, I'd say to you as well, if you still have a checkbook in the drawer, as I do, for an occasional check that has to be done, write out your check now. You know, we'll obviously, you can transfer your funds through EFT directly online to ourselves, a direct transfer, indicating the transfer using your name, etc., and all that procedure set out there. But don't leave it the last minute. Get it done early. We've had a couple of disappointed customers that just didn't get in there in December. And it's not necessarily about just getting in December. If we hit our cap and our threshold, we will close the fund. You know, we have to do that. We don't want to raise too much because it's always a balance between raising and deploying. As I said, we've raised 2 million there prior to December last year. We're deploying that now in SRE and Eden. We've raised a further 1.5 million this year in the first quarter, which was amazingly, hugely surprising from an existing investor. Says, yeah, we like it. We want to go back in for a further 50%. So don't leave it last minute. I've had a couple of disappointment phone calls the year before last where we had closed funds and we couldn't take investors in. We are available over the Christmas. There will always be a few people there that Turkey will be in and they're starting to think about it. So we are open over Christmas. Traditionally, we do man that office right through 28th to the 31st, but it's very important your checks are dated pre-31st of December and that your actual transfers take place.
Yeah.
Very important, 31st of December, particularly if it's an interbank. We tend to be Bank of Ireland with a lot of our funds, but you know, I know you can have seamless
And they're slower over Christmas.
It can be slower over Christmas and people getting in there. A lot of people are waiting on investments coming in from one product to reinvest. So do allow yourself that time. And I suppose, you know, as a concluding note, you know, we're on a journey here. This is, we're very much welcoming it. We've had a lot of interest in this renewable space, both in terms of projects coming into us and investors looking for this space. So very much, you know, if you're joining us as a Green Crowd investor, I encourage you to get in there earlier. Give us your pledges. What you can do after this is take maybe a bit of time to get organized, but let us know what you want, what you're proposing to do. A lot of our investors that come in before April have pledged what they're putting in. So give us an indication as to what you're coming in. And we don't want to over raise an SRE either. So there's a huge amount of interest in that. And we're just very conscious that, you know, we might have to, you know, close one of the funds a bit earlier than the other. So, you know, give us an indication of how you're thinking as well. And we'll keep you informed as how we go. So
yeah,
again, Dawn, as well, just very much thanking you for this process as well.
But yeah, I was going to say, just even in terms of I suppose the process itself, just for some of the newer investors, literally, I suppose in the weeks post year end, Janine does all of her final AML checks. Statements of qualification will be issued out to yourselves. It's literally as simple as taking those documentation, uploading them to your My Revenue, and that's giving you your tax rebate then on your 2025 tax. So you can have your 50% rebate back relatively early in the new year if you choose to do your taxes early in the new year, which is a very big benefit, I think, for some people in terms of their cash flow situation. And I suppose, as Paul I think mentioned earlier on, my role here is relatively new. A lot of that will be investor engagement as well. So together with Janine, we're going to be implementing quarterly updates as well on all these funds. So it's really, as I said, we're on this journey together and we're going to keep everyone fully informed as we go as well. So as I said, you're becoming a part owner of SRE or part owner of potentially a solar farm in Eden. So, you know, it's a journey that we're all on together. But yeah, that's pretty much it from our presentation point of view. But before maybe we do a final wrap up, Janine, maybe if you want to come with any questions that may have come in over the course of the hour.
Yeah, there's just one there, Donal, which I think you touched on, but it was just where do you get the cash to return the money in year 5? Do you need to sell the asset or the company, or is there cash flow available?
Yeah, I'll come in on that. For SRE is probably more straightforward. SRE has a hybrid of offerings to the commercial customers. And it depends on the profile of that customers. The international companies like what we call an O&M solution. They like just to have a long contract over 25 years where they're getting a very discounted energy price, sometimes as low as 13 or 14 cents. So with an energy price like that, we're paying off the investment over 25 years. So you have a longer term payback, you know, as part of that process. So we try and mix that as well. The smaller SMEs like to own something quicker. So we tend to have a 5 to a 7 year payback. So we tend to blend the two. So if we have projects that have a 5 year payback, a lot of the funds is back in time for paying back the investors. If it's going that extra bit longer into the 7, it tends to be the investor has been paid back, but the actual asset management fees that we as a fund get for managing that isn't paid back. So we're waiting for that. But through that mix, we can't exactly say how it will work out, but certainly for, you know, the likes of the national convenience retail units that we're actually deploying over, most of those monies will be back within the 7-year period. That's our timeline on that. So it's very easy to do a level of working capital finance in the last year or two on that. So you're always trying to marry the two. I am hoping, though, in terms of the value of the project, that we're going to have a blend. We had a couple of pharmaceutical companies that were looking at large rooftop in this space, and with all the changes, international tariff, they've shied back. So we're going to see more of an Irish SME mix in it, which will be a quicker payback. But yes, there will be a level of refinancing to be done. But the key thing to bear in mind with this is that essentially the projects are 100% investors. You know, the investors are in there. It's 100% owned by them. There's no debt in there at the moment. There's nobody with debentures. There's nobody with preferential right to be paid back in there at the moment. So everything is owned by the investor. So when we get to the end of 5 or 7 years, whatever profit is there, after our obviously management charge over the 5 years, but whatever profit is there is available there to refinance. And our modeling is generally geared to have at least 30% equity built up to allow the project to be refinanced. And that's the modeling that we will actually see with certainly on the solar farms as well. As we work with our solar farm developers that are bringing projects to us, the key thing for us is at the end of 5 years for those solar farm projects is to have our investors' payback lined up by the end of year 5, to have as much of that bonus and that hurdle cap lined up to be able to pay back the investors at the end of year 5. And our modeling is to try and have at least, you know, 30% of the funds available that will allow us to go to the traditional banks, because, you know, we have discussed the projects. Again, when we go in, we're looking at how we come out. So we have gone to the traditional banks, the likes of PTSB, AIB, and Bank of Ireland particularly, that have, you know, infrastructure renewable section, and we've gone to them to see what level they're comfortable at, and we really need to have 30% equity built up in that project to allow the refunding at 70%.
But I mean, really, I suppose, you know, you mentioned before, as long as those solar farms are kind of churning out electricity 12, 18 months, they generate cash very quickly when they're up and running.
Yeah, they're a very attractive model. You know, it's, you know, they have a government contract to buy the power. So institutions like that, we expect there to be a lot of play in this space and depressing of yields as it is, in that there's going to be a huge appetite for institutional money for these projects as they're de-risked, as the projects are built, as they've had 1 or 2 years of operations, as all the technical issues actually settle down. So it mightn't necessarily be a refinance. Again, we look at all those opportunities and we come up to year 3 or year 4. We expect it to be quite a bit of liquidity in this market for, you know, institutional money buying into the space. And I would have seen that in the UK, I suppose, touching back, Donald, to, you know, you mentioned on our first project, my first 2 projects in the UK were bought by two pension funds, Downing and the Guinness Asset Management Fund bought our projects. So we're expecting to see the same level of play here. And you're seeing that on the large utility projects now. Certainly some of the utility projects, as they're being built out, there's institutional money, the likes of Allianz coming in to buy these projects. So we expect it to be an opportunity for an onward selling of these projects as well as a refinance. And I think the attraction being part of the Green Crowd portfolio, for want of a better word, is it's not a 3 megawatt in Kerry that's being sold or being refinanced and a standalone 8 megawatt over in Sligo. It's going to be part of a 40 or 50 megawatt portfolio that we're building up through different investors and different institutions. And I think there'll be a level of leveraging or momentum that can be brought to that. But even if you were at year 5, touching back to SRE, and we hadn't fully got the money in, there's no other call. What's there is going back to investors. If it takes another, you know, year 6 or year 7 to pay back investors are being paid back. We're not contemplating a situation like which you know, some of our investors that have come into us have seen in other funds where they're getting 70 or 80% of their money back. Our entire model is based on them getting everything back before we get anything.
Well, like, I suppose, as we keep saying, the money is all going into assets. So those assets will churn out the cash in time. We really hope and envisage that it will happen by year 5, and it should.
Yeah.
But if for any reason it didn't, and it was year 6, it's still churning it out, and people will get it back, which is really what everyone needs.
Yeah.
Yeah.
So I suppose at this stage we want to get on and get the fundraising done, get projects underway. I mean, you've met Janine, you've met Donal and myself. As I mentioned, that's been supplemented by extra people joining our team as we go through into 2026. We have Kevin Augustin, you know, supporting us there on the deployment of the utility scale solar. We have an owner's engineer starting to come in and work with us on a full-time basis to deploy these projects. So we're in a period of a lot of change. So again, I suppose just to conclude, it's been a journey for myself. It's nice to welcome Donal on board to join myself and Janine. Thank you for your lunchtime today on Tuesday. Hopefully it's been beneficial to you, and you know, any subsequent queries that you have, please send them into Janine, myself and Donal. Paul at Green Crowd, Donal at Green Crowd, Janine at Green Crowd. Most importantly, log on, give us your expression of interest, and we really look forward to welcoming you as investors into Green Crowd and building these projects for ourselves and Green Crowd, for you as investors, and for the renewable space in Ireland. Thanks very much, everyone.
Thank you.
Done. Let's go to silent.